Hello, folks. Good morning. So, a little review. The crude oil market, I told you about a month or so ago to leave it alone, don't touch it. And you can see we've pretty much been hanging around here, moving basically on the response of whatever comes out of our White House in regards to Iran and the war with Israel and the three countries, us, Israel, and Iran. So, when we had this nice gap down here, and then looking at relatively smooth lows that I shared yesterday on X, um, I felt it was likely to get below this low because of this big gap down. This here was going to be my target for today. I was gonna put another short on, but it is what it is. Let's go into 1 minute chart. This took place this morning, rather aggressive sell off, and if you look at what actually let's do it through a 15-minute time frame. See these relative equal lows here? We went up into this gap here. Let's measure that. Look at that. That's interesting, isn't it? We got to a quadrant or an octant rather, then sells off. Now, as soon as we cleared this right here on the downside there, as soon as that occurred, and we're going to make that just a little bit lighter just by contrast. You see that? So the lighter one, when we drop down to a 1 minute chart, is this inversion fair value gap. And then this one here, you'll see when we get into the 1 minute. But it's these relative equal lows I'm aiming for, or what I was looking for yesterday, with the likelihood of giving me an opportunity to eventually get to this low, which I mentioned on the daily chart just a moment ago. All right. So you can see how right in here, we hit that 15-minute buy side about sell side efficiency that would lend itself to becoming a bearish inversion fair value gap. So it trades to it here. One more time there. Look at that. That's beautiful. But let's show you executions. You can see that's actually occurring right there, going up, hitting it. And I had this little bit of a whipsaw type thing here. Stop loss set right above that high, in case you're wondering. Lower, create a little civvy, traded back into that, and it just kept drifting lower, lower, lower. Um, Eventually getting down below that relative equal low. You can see it form, it filled rather there. So that's the business. Okay. And then I wanted to catch something taking that lower daily low out, but you know, I sleep. I was looking at, I woke up and I felt like the Lord told me, show the chart. And there it was. So there's your entry. And then there's the close of that. It's actually not showing that arrow. It's kind of irking me. There you go. See right in that volume of balance. Filled right there at the high of it. Right there. And took a little bit of heat there. But that was it. It was so quick. It was like there, gone, done. And then fell out of bed. So that's the business. I did some work in ES. Um, Actually, I want to look at DX real quick. Go to daily. All right. So you can see we haven't done anything here, which is why your Forex pairs have not done very much at all either. So until we get out of this funk here, Forex currency pairs, unless you're trading the exotics, that means non-US pairs. That means if it has USD in the title or the pair name, then it's not likely to move very much. But if you use any pair that doesn't have the dollar in it, you'll have movement. Okay, so that's the business on that. Um, Gold. Told you to leave this one alone too. And I gave you some inversion fair value gaps. If it was able to get above it, then it would go higher. It went into it and treated it as premium, and then has faltered lower. So right here, I was telling you it's uncivilized if you did not take profits. And we had a little bit of an attempt to get up here again and then fell out of bed. So again, when everything becomes mania, that means everybody's excited about it. The same thing happened to Bitcoin. It's going to go to a million, and it fell short of 127,000, which I think was interesting because I said it would not go any higher than that. Then we sold off on that. Silver, I said the same thing. And I'm not going to try to sit here and say, attaboy, Michael. I'm just reminding you that when I'm telling you to stay away from a particular market, it's for your benefit. I'm not getting anything out of it except for a clean conscience because a lot of you don't have the experience. You don't know what you're looking for because you're brand new or you're inexperienced. And you think that just because it's going up a lot parabolically, then it should keep going up. And that's not the case. Okay. When the markets enter capitulation, like it did in here for gold and silver, um, it was over. I told you that they would pull a Hunt brother type thing like they did in the 1980s. And you can see that pretty much is what they did. They collapsed it, brought it back down, and I don't personally see higher prices for silver at the moment, but you decide what you want to do. Okay, my hands are off on the metals. And I mentioned Bitcoin. Let's just take a peek at that because a couple weeks ago I was scribbling on the chart. So we had the Sibi in here. I believe that the fact that it's struggling in here, revisiting these lows and that consequent encroachment, how we trade through this on a closing basis is indicative of whether or not we go down into 49,677. And if we lose that, about 24 to 26,000. And then my my personal favorite support level is right there, 0. So I just toss that out there for your consideration. I think that's going to be it. I'm going to take a look at the NQ this morning. I messed around with ES yesterday, and whatever work I do today on NQ, I guess you'll see. I'm just going to be practicing all demo. I'm not doing anything with live funds. Still feeling a little disjointed. I was being facetious this morning, saying, was I kidding? Rust. um, but the markets are being a little fickle right now, so just bear that in mind. And I'll catch up with you guys later on this afternoon, Lord willing. Be safe.